Every price chart of every instrument and any time frame is telling us a story. And for us as traders to be able to dissect the information from the market, we're going to have to use the price action rules to help us navigate the market correctly. Now, there are a couple of main important price action rules that every trader needs to know. And in this video, we're going to go through the price chart following the price action rules and how to identify the proper places to enter. One of the most important rules you have to master is the trend line rule, which says after break of a channel, traders expect for prices to retest the extreme. And today's structure started on the left with very strong downtrend. You can see the 21 bar EMA, just a supportive indicator, is pointing down. We have very strong downtrend that managed to break at the bottom, which means we have overshoot. Overshoot is oversold territory, and I don't need any indicator. I can just read a pure price action and I'm able to understand what the market is doing here. We had break of the trend channel line and we can expect stronger momentum in opposite direction. However, we are breaking the trend line at the top, and the trend line rule says that you still are thinking bearish because we still expect for prices to retest the new low of this downtrend. And you can see prices eventually retested the new extreme, so your bias still remains bearish. However, you have to respect the overshoot because we can have stronger correction. This is exactly what market did. Notice, market likes to move in pairs of twos. This is why two-legged pullback is going to be high probability setup. You have a two-legged pullback, shorten uptrend played up with the break and new extreme, because the trend line rule applies not only for the main channels but even for the tighter channels. So the break and new extreme indicated that the bullish correction depleted, and notice suddenly consolidation form. EMA completely flat, no room to get out. You're basically sitting on your hands throughout this area. This brings us to another price action rule, which is a trend range rule, which says most breakouts or trend ranges will fail. And notice prices broke to the downside and came back into the trend range. However, you're not interested in buying. Why? Because we traded down and the bias is bearish. Then we had a two-legged pullback and we broke the upper portion of this trend range, and we can fade the breakout because we expect for market to retest new extreme because we traded down. This downtrend still needs to get new extreme. Overwhelming sentiment is bearish, and we have new low, first entry short, pullback, second entry short, alongside with the failed breakout. So this is a great high probability setup. Notice uptrend played out with the break in new extreme and larger two-legged pullback. And what happened? Both channels reached new extreme. The bigger one reached new low, and even the tighter one reached new extreme as well. So we can see that the price action rules can help us navigate the market to expect the bearish bias, and we're able to identify a high probability place where to enter, fading the breakout, second entry short. But now that we reached new extreme for both downtrends, I have to pause my short setups. The downtrend was too steep and this correction was too sideways for me to be looking for a wider channel. This is right now resembling a range-like structure. We reached new low, so I'm not thinking about selling at all. In fact, I can see that the prices are trending to the upside, which at this point offers me a couple of ways how I can look for a possible bigger channel. Because we have a break new high and we keep pushing higher, we keep pushing higher, we keep pushing higher. So this is clearly a sign that this tiny channel cannot take into consideration this entire price action. There's most likely a bigger pattern. So I can draw wider channel like this, which is not fully confirmed, or I can select a tighter spike and a channel like this, which makes prices fit great. Important thing is for you to still look for some bigger pattern for channel, because these candles are never alone on the chart, and we can see that the market keeps pushing to the upside. So this is confirming our nice spike and channel. And notice we have double top, first entry long, pullback, second entry long. Now the reason why I'm counting for second entry long is because, as we already talked about, the market likes to move in pairs of twos, and a two-legged pullback at the right key entry point under the right context is going to be a high probability setup to enter. So we can see we have micro new high, first attempt to go long, pullback, second attempt to go long. We can see that this is also kind of like a small support confirmation, and this second entry long is confirming the wider channel. So we have multiple key entry points. The EMA with the trend line is combined. You can see first two swings allowing us to set up the trend line, and third swing will confirm it. Or if you're playing this tighter channel, you expect new extreme according to trendline rules. But the signal bar was a bearish bar. So you would have to enter double bar entry, which means you have to wait for trigger above this bullish bar, and then your stop loss has to go one tick below this bearish bar, because this was a signal bar. So this is how you treat the double bar entry, because if you still like the setup, if you are at the multiple key entry points, which you are, the double bar entry can be possible alternative. So this can be taken. It is definitely more aggressive, but once the two setups are big like this, you need to wait for trigger, place your limit order, let's say a couple ticks back where your initial entry would have been, and you can see you would have missed the setup. But this is great two-legged pullback, second entry long at 2 key entry points. And market keeps trending to the upside. Okay, I'm going to redraw the downtrend. I'm not thinking about selling. I'm not thinking about buying because we're below EMA. I'm not thinking about selling because we have option in play and this bullish momentum was too strong. Even though it worked for a scalp, I gotta be patient. Okay, and now that we're pushing above EMA, it's resuming the overall bullish bias, and I'm expecting for this channel to create new extreme. So what setup I'm expecting? Failed second entry short or second entry long. Okay, we're back below EMA. I can't go long. Okay, can we get a failed second entry short? And we cannot. Market just created new extreme, and unfortunately there was no way for us to enter. So you can see the trend line rule. This was the bigger pattern. We confirmed clear bullish channel. We also had new extreme for this downtrend, and subsequent push above EMA is confirming that we are right now going to reach the new extreme. So at this point, once again, once I'm observing the fact that the price has reached new extreme, I need to pause my long setups. I will need to see confirmed momentum. This was not a strong uptrend. Remember, we were in a trend line structure. EMA was flat from the point where the downtrend had a break. So this is not strong uptrend by any means. I have to just respect the tighter channel with the break new high. If we started with a straight strong uptrend, you can be thinking about widening the channel. So just be careful. Okay, can I look to sell? I cannot, because notice I have first leg down, break, second leg down. I already have two broad legs down. This short-term channel has a break new low. I'm not really looking to sell just yet. When I have two broad sideways legs down, when the structure was bullish, I cannot sell just yet. Okay. And now we have new low, first entry short pullback, second entry short. The second entry short is tempting, but it is a little bit sideways and it's definitely more advanced because the structure is still quite bullish. We're not fully below EMA, so decent second entry short if you're a more advanced trader. If you're a beginner trader, you gotta skip this setup. And prices keep trending to the downside. Okay, so at this point, it's clear that the bullish momentum depleted, and I'm gonna be looking for possible wider downtrend because the market is shifting a cycle, break new high, and we are right now reversing. So what am I expecting? A high probability setup to sell. I cannot sell at these lows. I want to see correction to the EMA. Okay, we have first entry short, can get a second entry short. We cannot. This low already broke below this low, so we have only first entry short and count starts over. Okay, and since the market keeps pushing lower and I have such a tiny break, let me see if I can widen the channel a little bit, because when this makes really sense. When the break is so tiny, and if you make it wider and you still don't distort the price action, you can actually make the channel slightly wider. So this downtrend is still in play. It's aligned with the EMA, which is a good sign. And notice we have a new low, first entry short, pullback, second entry short. It touched EMA, strong bearish rejection. This is another second entry short to like a pullback, but you're not fully at the EMA. However, the momentum here was so strong that it is worth taking. It's such a great signal bar. You have barely enough room for a scalp. Okay, we're breaking the channel. So according to trend line rule, what do we expect? We expect for prices to create new extreme. So even though the channel is breaking, remember, every price chart is telling us a story. We are breaking the channel. That doesn't mean I start looking to go long just yet. Because unless the bears will reach the new extreme, there is still a chance that the market may continue working lower. This is why we're following these channels, and the channels are objective. They are not subjective. There's objective way how to draw them. Sometimes it is easy to find than others, but there's definitely objective way how to draw them. You can see how nicely this channel fits. And this right here is a triple test. One tap, double tap, triple tap. So this is a triple test, supportive pattern while we expect new extreme. Decent setup to take a chance, because notice how big this bar was bullish, and at the close of the bar everybody started selling, resulting into such a massive bearish tail at the top. Combine with the triple test that you're going to reach new extreme, decent setup. New low was formed by one little tick. If this one tick is lower than this, it doesn't matter that we don't have a body. It's important we just broke the low inside the channel. So new low was made. I need to mark my new low. At this point, I can expect correction or reversal. And lo and behold, prices are reversing to the upside. So I need to instantly switch. You can already see this is starting to resemble a trend range. A lot of up and down, up and down. The trends, they don't last too long. Notice if you're going to zoom back, you can clearly see that this is a range-like structure. So in order for me to navigate this range-like structure safely, I'm just following these channels. Once we have a break new high, I'm looking to reverse, break new low, I'm looking to reverse. This is not a strong trend in either direction for market to continue. Keep it working to the upside, nothing is really much forming. Now this channel is getting confirmed. I need to redraw the downtrend because there are channels even for the corrections. We can see EMA holding and we have a second entry long. Can I go long on a second entry long? Not really, because the downtrend is still in play. I would like to see high-low confirmation setup, which never formed. Even if you see this bar, there is no trigger below this bear bar. It's inside bar, you can't really go long. Okay, nothing is forming and market is trending to the downside. Remember, this is a situation that I want to talk about. The goal is to wait for prices to give you clear context, clear pattern, and a clear key entry point. Just because there's a time and period in the market where you can't really put the figure on the overall price action, that doesn't mean you're trying to overanalyze the candles and you're looking for setups on every candle. You have to remain patient during the situations where the market is just developing and the bias is not clear, because you're supposed to be waiting for high probability setups if you want to make your job easier. If you're trying to guess what is the direction of the market and what is the high probability setup, then you're just gambling and it's very hard to be consistent. So you have to be patient throughout the structure that is unclear. You can see this is hard to identify what the market is going to do. Notice we have larger two leg pullback, first leg, pullback, second leg. I can start to see that the prices never fully retested the new extreme of this uptrend. For this reason, I'm going to identify the resistance and I'm also going to identify the support. Why? Because notice the structure of the market. EMA completely flattened, a lot of price swings up and down, and indecision. And if there is indecision, you're probably trading some form of a trend range, and this is looking as a trend range. No clear trend, just a lot of tight channels that quickly pivot after reaching new extreme. So you just gotta be patient. Gonna redraw my short and downtrend. Okay, break new low. Yeah, break new extreme. Yeah, break new high. Gonna redraw the channel. I have a second entry short. Can I go short? I cannot. The downtrend has a break new low. There is no clear bias. I need to be patient. This channel needs to get new high, which it reached new extreme. So we have another new high. And notice, price action likes to move in pairs of twos. First leg up, second leg up, first leg up, second leg up. And market keeps trending to the downside. We have a failed breakout, which trend range was established, and most breakouts of trend ranges will fail. And notice prices broke the trend range again, and the breakout fell. Can I go long? Well, you can, because you're really far away from EMA, and EMA acts as a magnet. You will most likely pull closer to it. But notice we have series of lower highs and lower lows, so we have clear bearish imbalance. You can see prices trending to the downside. I don't really want to draw wide the channel because I'm in very tight trend range, and this is too broad for a trend range. But you can see the possible channel indicating bearish imbalance, which means that the market may eventually continue working lower. So you just have to be patient. There's pretty much nothing forming. You have two conflicting patterns. Range breakout will fail, but you have bearish imbalance. Okay, now when I was watching this live, this really tricked me into looking for possible channels. So this was the point. I wasn't playing wider channel till this point. Once we broke downside like this is where I started to consider the option of drawing wider channel. But also I took a step back, and I saw first leg down, pull back, second leg down. Remember, market likes to move in pairs of twos. So I drew the channel, but notice what quickly happened and market completely reversed. So once you see this, you have to remember that the structure was trend range, and we had larger two-legged pullback, and especially the 10,000 tick chart, the higher time frame, helped me to see visually the two-legged pullback. So I'm going to delete this channel. It was too broad for a trend range. It was just a visual two-legged pullback, and the second leg took much longer. It was just flatter leg, series of lower highs, low lows. You can see there are two-legged pullbacks inside of the two-legged pullbacks, and at this point, once I see such a strong bullish retracement back into trend range, the structure is bullish. And what am I thinking? What is the bias? It's bullish. Okay, we have a first entry long. Can we get a second entry long? We expect new high. We cannot. We already reached micro double top, but here we have visual, but it's already too big. The market keeps trending to the upside. And here is a little nuance about the structure we're observing. If the failed breakout is very deep, you can see how deep the failed breakout was, even if I'm gonna select these lows. And you see such a massive bullish spike that really didn't confirm the EMA from the very beginning of the failed breakout. There's a chance that you're gonna reach the top of this trend range, because according to trend range rules, most breakouts will fail and you're gonna go from the bottom all the way to the top. And since we didn't push below EMA here and EMA rejected twice, this is a typical behavior where there is even a wider channel being present. So this is where I'm going to redraw a wider channel. It's getting confirmed here. First two swings will set the trend line. Third swing will confirm the trend line, so I can consider the trend line valid. And I'm looking for high probability setup, but we cannot pull back to EMA, and we have micro break and a new extreme. We're at the range highs, which you can see sellers are jumping into the market. All the bulls are taking profits. Okay, we have a new high, first entry long, pullback, second entry long. What is the setup I'm expecting? I'm expecting failed second entry long reversal pattern, because we just reached the break in extreme, but the failed second entry long is this big, which by the time the failed second entry long forms, it's closing too low. The scalp was already made below this bar right here. I cannot end this bar. It doesn't make sense money management wise and even scalp wise, because the scalp was already made. I can't really sell. By the time I get second entry short, it's still close to these lows. I don't really like going short here. If you took this trade right here, I can see why. I can mark it more aggressive because it is a second entry short, but because it closed basically at the same level as the failed second entry long, so close to the lows, I don't really like it that much. You would have gotten stopped out. The market keeps working to the downside. Okay, so once again, pay attention to the market. First leg down, pull back, second leg down. So this is your clue in ranging markets: sticking to tight channels and sticking to looking for two-legged pullbacks. So break new high, larger two-legged pullback down. I cannot sell because we just reached a break and new low for the downtrend. Larger two-legged pullback indicated depletion of the bearish momentum. So there's a chance that the market may reverse. We're trending to the upside. Okay, this is a great sign for bulls. You're back above EMA. We have a first entry long. I'm expecting second entry long. I get a second entry long, but the signal bar was bearish. And by the time I get this bar, it's very big, stim at the top. You're closing too high. You know, price action is very predictable, but I can't really enter. Okay, even this channel has a break new high, and notice how sideways the correction is. You may be thinking, okay, Thomas, can I draw a wide channel like this? No. The correction is too sideways, double top, and I am trading a trading range market. And according to trading range rules, most breakouts will fail. This is another failed breakout where most retail traders will be buying the breakout because they're trading the breakout strategies. They're watching the order flow. They see a lot of buy orders here, and they're going to be buying, hoping that the market will continue higher because they're anxious to get out of this trading range because it is boring. It's very mundane to be trading a range like this, and they want to trade the trend, and they're hoping the prices will break out. But most breakouts will fail here, here, here. So you expect sellers to overwhelm the market. And what are you looking for? Failed second entry long, reversal pattern. New high, first entry long, pullback, second entry long, failure. But we didn't manage to close below EMA. and the bar is not fully bearish. So the idea to look for failed second entry long is good. It just didn't form that well. But you still want to study this. You still want to draw and learn to spot the channels. You still want to learn to understand the price action, where the prices may pivot, and what setup to expect. Just because it didn't form great here, the next time you will see it a month from now, there may be a great failed second entry long, and you want to know when to jump on this trade. Okay, we're trending to the downside. What is the target for prices that I expect? I expect for market to reach the support. This downtrend needs to get new extreme according to trendline rules, because we just have a close outside. We're not expecting reversal. We expect the test by the sellers to retest the new low. I have a new low, first entry short, second entry short. I have micro two-leg pullback, uptrend reach a new high, there's a small break in new extreme, and EMA keeps holding. Notice possible triple test forming. What am I expecting? I'm expecting second entry short. Okay, EMA keeps holding, triple test keeps holding, we need new low, but notice it closed almost at the very low of the move. It is just too gigantic. We're so close to these lows. Even though great high probability setup on paper, had it close half its size, this would be a no-brainer easy setup if you had a smaller bar, but my bar is so big and so close to these lows, I can't enter. And you can see this is what high probability setups does. And if you follow the price action rules, you expect new low, you're at the EMA, and market continues working lower. Okay, we can see that the prices are breaking to the downside, and notice how strong the downtrend is, and I have a second entry short. Okay, now more advanced trader can already see that there may be wider channel. Why? Just like here, if the downtrend would look like this and you would have, let's say, sideways correction like this, you would not draw wider downtrend. But since the correction is very minimal and we never broke above EMA, this looks like a one move down, just like here, one move up. This is not broad correction, so there may be sideways leg down, but you want to be careful. I have a second entry short, but I have short and uptrend in play, so I cannot really take it. However, if this second entry short will work, it will confirm why the downtrend for me, so I'm going to redraw it. I'm going to redraw the wider downtrend. Okay, this is good. So this is confirming the bearish bias, and this is confirming the breakout pullback, because prices broke below the range low. Most breakouts will fail. Prices came back, tested the breakout area, and it resulted into breakout pullback, because sellers are buying right now and the support is acting as a resistance. This is what breakout pullback is. But you don't want to sell upon the breakout. You want to wait for breakout to fail and pull back reaction by the sellers to have a sign that you can sell. So right now, the two swings set up the trend line. This confirmed the trend line. I had an uptrend in place, so I got to be careful. So what is the setup I'm expecting? I'm expecting lower high. And notice, close outside by the bulls, attempt to create new high, but bulls cannot create new high. But that is okay, because there's EMA in the way, holding once, holding twice, potential downtrend, and this key level. So three key entry points are showing resistance, and this is valid attempt to create new high and a great tier 1 signal bar, lower high confirming the second entry short. This was the setup I took as well, and you can see this is what you're supposed to be waiting for with a great high probability setup, because you're expecting for prices to continue working lower. Okay, I'm going to make the channel slightly wider. When I was watching this live, I had my channel with tiny break and new extreme, but you can see it still makes it fit even wider. So this is the great high probability setup you're expecting. And every day there are a couple of these easy high probability setups, and you have to do a lot of waiting throughout the indecision, as we saw earlier. And a lot of traders on the internet, they don't talk about this, but trading is not only about learning to identify the place where to enter, but it's about also learning to identify the area where you're not supposed to be placing any trades, because trading is half trading and half waiting, especially if you don't want to be gambling, because setups like these, they're quite rare. You can see we went through, half a day and we didn't have that many setups, 3, 4, 5 setups like this. So you have to be patient, because you want multiple factors to align. You need to have confirmed key entry point. You need to have no congestion, great reaction of the setup, multiple key entry points, and great bias. And once all these things align, this is the setup that I like to be taking. Okay, we're breaking to the upside. I cannot go long just yet. There's no even trigger higher. And you're pushing back to the downside. So structure is still more bearish. We expect new low for this downtrend. You can see key level holding as resistance. However, I cannot sell. Nothing is really forming that great. Okay, and we formed new extreme. And once again, notice one leg down, broad sideways break, and a leg down. I cannot draw wide a downtrend because it would be too wide for triggering structure that I'm trading. So when we are trading a ranging market, even though it is tempting to draw wide the channel, we generally got to be careful. All right, so I'm gonna mark my new low. The broader the correction is, the chances are higher that there is no wider channel. Okay, we're trading to the upside. We have massive spike. Good. And notice new high, first entry long, pullback, second entry long. Great two-legged pullback, great signal bar. EMA keeps holding, bullish spike after new low, indicating possible trend reversal. Great high probability setup, no congestion, and market keeps trending to the upside. Okay, we're not touching the EMA. I cannot go long. Okay, I micro break new high. But notice what is happening. We keep pushing high. Okay, I can see that we have first two swings allowing me some geometric formation. And if I'm gonna connect it, you can see a third swing confirmation, which explains why there is no reversal after this break a new high. It's not because the trendline rule is not applying. It's because there's actually a bigger channel in play with these broad two swings, third swing confirmation. So structure is still bullish. I'm going to redraw the downtrend. Close outside. New extreme. First entry short. Can you get a failed second entry short? Expecting for market to create new high. There is no failed second entry short. And we created the new extreme for the broader channel alongside with the trend range being established. Why? Well, because we have flattening EMA and a lot of price swings up and down, up and down. For this reason, I'm going to draw my trend line wider, not tighter. Okay, we have overshoot. We have overshoot, which means we can expect stronger pullback. We have a failed second entry long, which after new high, you may expect bearish push down, and you would be correct. But notice we managed to overshoot this tiny channel, so you can have stronger pullback. You have big bullish bar. You really want to be careful. You want to see second entry short if you have indecision like this, which never formed. Market eventually created new extreme, and prices broke to the upside. As you can see, we finished the day with indecision. You don't want to be really touching this because it is too unclear. This is how to navigate the price chart by using price action rules. You can see all these moves that are contained by channel. Price action is telling you everything here. You can see a ranging market with a bearish imbalance. So there are multiple price action rules that are working together. You have confluence of multiple rules. But there's always a channel. You get a couple of price action nuances where with experience you will be able to recognize when to draw channel just a tad wider because the momentum is stronger. Correction was minimal, and you can see there are a couple of easy high probability setups that if you're waiting for, you can really capitalize on. So I hope you had a great trading day. I'm going to talk to you next time. Take care, everybody.